When the markets get shaky, gold seems like the go-to safe haven. But here's the truth. Not every way to invest in gold is actually safe. Some methods are seriously safe, while others are seriously risky. So in this video, I'll walk you through the safest ways to add gold to your portfolio and the riskier plays that could earn you more money or possibly backfire if you're not careful. When inflation eats away at your cash or the stock market takes a nosedive, gold has a history of holding its value and sometimes even gaining when other investments are losing ground. In fact, in just the last year, gold has jumped about 50% in value. And that's not normal every year, but it shows how gold can really shine when everything else just isn't doing well. But it's not just about chasing big returns. Gold is popular because it isn't paired with stocks or bonds. That means that, if your other investments are really struggling, gold might help balance things out. It's a classic way to diversify. So why do people keep, coming back to gold? It's pretty simple. Gold is easy to buy and sell. It's recognized everywhere, and it's really not tied to any one country's economy. Plus, it's been a store of value for literally thousands of years, long before anybody was trading stocks on their, iPhone.
Some experts argue gold doesn't generate income or dividends, so over the long run, stocks still tend to beat gold's returns. Do you think gold is more for stability than growth?
Yes, Tiara, thanks for chiming in. I actually think that's pretty accurate. While it's been growing a lot lately, that's really not too common. That said, there are a bunch of ways to invest in gold, and not all of them are created equal either. Some are as simple as buying a gold coin, while others involve, making trades on a brokerage. So let's start by talking about owning physical gold and the mistakes that most beginners make when they jump in to try to do that. So have you ever wondered what it's actually like to own real gold? Not just a number on your screen here, but the kind that you can actually hold. Well, there's something undeniably cool about having a gold coin or a gold bar stashed away. But before you jump in, there are definitely a few things that you need to consider and a few things that you need to know. So first, you've got options. So gold coins and bars, they are the most popular. Coins like the American Gold Eagle or the Canadian Maple Leaf, they are backed by government mints, which makes them easy to trust and simple to sell later. Bars, they come in all sizes, from tiny 1-gram pieces to really hefty bricks. But here's the catch. You want investment-grade gold, which means that it's at least 99.5% pure. So you always want to check for authenticity and make sure that you're buying from a reputable dealer. Buying physical gold is easier than ever with online retailers as well, but just don't skip the research. The scams, they're out there. Look for dealers with strong reviews and clear return policies. You can also buy from local coin shops, some banks, and even Costco is selling gold right now. But let's talk about the part most people really overlook, which is storage. So keeping gold at home, it might sound simple, right? But it does come with risks like theft or fire.
Just to add, the FBI estimates that thousands of home burglaries involve stolen precious metals.
Yeah, see? Exactly. So if you go this route, invest in a solid safe, security, and consider extra insurance, since most homeowner policies rarely cover precious metals. Now, some people use a bank safe deposit box or like a private vault, but those come with their own costs and limitations as well. So if you like the idea of actually holding real gold and you don't mind the extra steps related to storage, this approach could definitely be for you. But if you want something even simpler, there are many different ways to invest in gold that don't require a safe or a secret hiding spot. So up next here, we'll look at how you can own gold with just a few clicks on your smartphone. Ever wish that you could invest in gold without worrying about where to hide it or how to keep it safe? Well, ETFs or mutual funds, they might be for you. So here's the key difference between the two. So gold ETFs or exchange traded funds are like buying shares in a giant pool of real gold. Each share you own represents a slice of that pool, and the price moves almost exactly with the price of gold. You can buy or sell these shares anytime that the stock market is open, just like you would any stock. It's fast, it's easy, and you don't have to worry about someone breaking into your house looking for gold bars. Gold mutual funds, they are a little bit different. So instead of trading like a stock, you buy them directly from the company that runs the fund. These funds, they might hold gold ETFs, mining stocks, or both. Now, the upside is that you get professional management, and you can even set up automatic monthly investments if you want to kind of build your gold position over time. And the downside, well, if you ever want to sell immediately, so if you want to sell like right now, you can't. Once you click sell on a mutual fund and try to sell it in a brokerage, you'll actually sell at the end of day sales price. Now, granted, it doesn't take too long to get your money, as it does sell by the end of the day, as it says. But if you want to move money around in a brokerage account, right away, it does require slightly more patience. Now, the big payoff with either of these options is the simplicity and the flexibility. No safes, no insurance, no hassle. Just exposure to gold's price movements. And if you're worried about fees, gold ETFs, they usually have lower annual costs than mutual funds, though both of them are much cheaper than storing physical gold for the most part. By the way, if you want more breakdowns like this to help you invest with confidence, go ahead and click on subscribe right now, as I have some videos that I know that you'll like going live really, really soon. But here's the twist between ETFs and mutual funds, getting back to that. While they track gold pretty closely, they really aren't perfect. Sometimes the fund's price can drift a little bit from the actual price of gold, especially if it's a mutual fund that holds mining stocks. Still, for most people, this is the easiest way to add gold to your portfolio. But what if, you want more than just tracking the price of gold? What if you're looking for bigger potential gains? And obviously, you're okay with a little more risk. Well, let's talk about gold mining stocks and why they can be a wild ride for investors who want to go beyond the basics. So when you buy a gold mining stock, you're investing in a company that digs gold out of the ground. That means that your returns aren't just tied to the price of gold, but also how well the company runs its business. So if gold prices go up, mining companies can see their profits and their stock prices jump even higher. But if gold prices drop, or if the company hits a snag like higher costs or even a mining accident, your investment could take a bigger hit than the price of the gold itself. Gold mining ETFs, they make things a little bit simpler by letting you invest in like a whole basket of gold mining companies at once. And this helps spread the risk. So if one company has a bad year, it won't tank your entire investment. Plus, some mining stocks and ETFs, they'll actually pay dividends, which is something that you definitely will not get from physical gold or most of the gold ETFs that are out there.
Just to play devil's advocate, mining stocks can tank even when gold rises.
Absolutely, Tiara, which is why you need to be aware of the risks. Now, the payoff, gold mining stocks and ETFs, they offer the potential for higher returns, but you have to be comfortable with the bigger ups and downs. And if you're looking for more excitement and don't mind the risk, this could definitely be your move. But if you want something that's steadier, sticking with physical gold or gold ETFs, it might be a better fit. But what if you want to go even further? Hear me out. Maybe try some advanced strategies that let you bet on gold's future price or profit from short-term moves. Well, that's where gold futures and options come in, but they're not for everyone. So stick around here because next I'm actually going to break down what these are and who they're really for. With futures and options, you're not actually buying gold itself. Instead, what you're doing is you're making a contract to buy or sell gold at a certain price on a future date. Now, I want to say something here, and I just have to. I see this as an advanced investing strategy, and it's one that I rarely do myself. If it sounds easy to predict what the price of gold will be in, say a month from now, here's a simple dose of truth. It's not. So be very careful and really educate yourself before you do anything like this. That said, let's make sure that we break it down here so that you really understand the concept, right? So gold futures are agreements to buy or sell a set amount of gold at a specific price on a certain date. These contracts are traded on brokerages or exchanges, and you only need to put up a fraction of the contract's value up front. and this is called margin. That means that you're using leverage, which can amplify both your gains and your losses. So for example, if gold jumps to $100 an ounce and you're holding a futures contract, your profit could be much bigger than just owning the gold directly. But if gold drops, you could lose more than you invested, which is exactly why I don't recommend this strategy. Now, options, they work a little bit differently. They give you the right, but not the obligation, to buy or sell gold at a set price before a certain date. So if gold moves the way you expect, you can cash in. If not, the most you can lose is the price that you paid for the option. So here's a quick example because it gets a little confusing. So imagine that you think gold is about to surge. You buy a call option, and if gold jumps, your option's value could skyrocket. But if gold stays flat or drops, you might lose the money that you paid for that option. No gold bars, no coins, just less money in your bank account. But what if you want something that's, more modern and simple, but still tied to gold, without all these wild swings that we've seen lately?
Those are rookie numbers in this racket.
Well, there are some new ways to invest in gold that are also changing the game. So let's check that out here next. So there are some new school options out there that make gold investing even more flexible, sometimes without ever touching a bar or a coin or even opening a brokerage app. So digital gold platforms let you buy fractions of gold online, often, with just a few bucks. So you own a piece of physical gold that is stored in a secure vault, but everything is managed digitally. So no safes, no shipping, no hassle. It's like owning gold in your phone instead of, holding it in like a sock drawer, right? Another option, and it's getting more attention, is the gold IRA. So if you want to add gold to your retirement savings, a self-directed IRA lets you hold physical gold, gold ETFs, or even mining stocks inside your retirement account. Now, that all said, just keep in mind that there are strict rules about what kind of gold you can hold and where it's actually stored. So you'll definitely want to see the rules of your IRA and understand that before investing. And there are even gold-backed cryptocurrencies popping up as well. And these are digital coins that are tied to real gold reserves. Now, they're still pretty new, and frankly, they're risky, but they do offer a way to trade gold instantly, 24/7, with the transparency of blockchain technology. Now, the main takeaway, you're not stuck with just coins, bars, or traditional funds here. So whether you want to go fully digital, add gold to your retirement plan, or experiment with new technology around gold, right? There's a gold investment option to fit your style. But just remember, every method, it comes with its own rules, fees, and risks. So always pick the approach that matches your goals and your comfort level. Now, if you're on the fence between gold and other alternatives like Bitcoin, you're not alone. A lot of people are comparing those two right now, and the wrong choice could literally cost you millions in the future. So before you decide, go ahead and check out this other video right here. I think that you'll absolutely love it.